Welcome back. Well, the SGX 50 is suggesting a bit of a pullback, but let's focus on earnings and the start of earnings as well. We have Aditya Suresh, Head India Research and Strategy at Macquarie, who joins us. Hi, Aditya. Morning. Thanks so much for joining in. Well, what are you making of the start to earnings season? We have a few IT names that have come in there with their numbers. It's a mixed sort of reaction that we're getting. But what kind of earnings, growth are you factoring in, say, for this year? And do you see there's a bit of a downside risk to it?
Thank you, Nigel, and thank you for having me on the show. Just zooming out a bit and heading into this earnings season, one of the key themes to kind of think about is India is set to deliver about 16% EPS growth this year and then next year as well. So 2-year forward EPS CAGR of about 16%. Within this, if you kind of compare this with say, emerging markets, the world, it's say +5%, +6%, right? So there is that big kind of growth outperformance message, which a lot of us are expecting to be reiterated through this earnings season. Into the results, one area where we're feeling comfortable is financials. The other point we've been making is that in terms of the cuts to margins which we're expecting in IT and consumer, that, in our opinion, is already in the base. So into this result season, and this is something which we don't typically speak about, which is that we're feeling far more comfortable with where the aggregate earnings expectations are, and plus 16% looks achievable. So far, I think IT is doing okay.
What about oil and gas, Suresh? You know, this quarter, at least in terms of expectation, oil marketing companies are likely to post a big loss due to the marketing as well as inventory losses since retail pump prices were frozen. But there is that compensation close to about 22,000 crore rupees, which is going to be doled out. What have you made of the recent developments?
I think the oil marketing companies predicting quarterly earnings is impossible, right? So sure. So the last quarter, these companies reported these record losses. This quarter, perhaps, is a bit of reversal to that. That's kind of broadly what's in our expectations. But focusing on quarterly earnings for the oil marketing companies in an aggregate India sense, I don't think moves it too much.
No, but since they are going to be compensated now, does it make OMCs a buy now, a compelling buy?
We do have buys on these companies on valuations. I think it's tactical in nature to some of the points that you're making. I don't think these are fundamental kind of, for these to be fundamental buys on a long-term basis, we need far lower volatility in earnings.
Right. Aditya, you said 16% growth. Where are you at for 23 and 24 now in Nifty earnings?
At that 16%. So we're at about 16% for both fiscal 23 and fiscal 24 growth.
No, in terms of actual absolute numbers? Because, I mean, many have pulled down their growth estimates for 23 to about what? I think 840, 830, 840, 11, 12% growth. 24 consequently has also been brought lower. So just trying to understand.
So Prashant, we do this on an MSCI India basis.
Okay.
And on that basis, yes, we have kind of pulled down estimates of the past 2 quarters. But I guess the setup which I was trying to explain was that today, at plus 16%, that looks far more achievable. 6 months back or 9 months back, the growth expectations which were built into numbers, that was probably a bit too high.
Aditya, do stay on. We want to just quickly turn the spotlight on the IT sector because